A very good morning everyone. Welcome to our GST series. Today it's our lecture 8 and our topic is what are the deficiencies in earlier tax regime. Earlier tax regime is nothing but the system which is there before GST has come into existence. The government system in taxation, in indirect taxes. So we'll first learn to know these deficiencies in order to understand the value of GST, obviously, right? For example, we'll know value of our legs only when we see a person who is crippled. So in the same way, in order to understand and appreciate the value of GST and its benefits, first we have to know what are the deficiencies in the earlier tax regime. So let's move to that. But before continuing with this topic, let me take 2 minutes of your time so that we'll revise our previous class. Okay, yeah, let's proceed. So in our previous class we have discussed about input tax credit. Okay, so in case of input tax credit, how that works and how this happens across the value chain is, first there will be a manufacturer. Okay, so for simplicity's sake, we have assumed that manufacturer has no purchases and he is not paying any tax on his purchases. Okay, so in order to understand the concept, so yeah, so manufacturer is making some iPhone. He's iPhone manufacturer, actually iPhone, and he has manufactured iPhone for the cost of 20,000 and he added his profit element of 60,000. After that the price has become 80,000. So for 80,000, now for this 80,000 he is trying to sell that good to distributor. Okay, so yeah, now government will come into picture. Government will come and government will ask GST from them. So GST of 8,000 is levied on them. That is nothing but 10% GST. Okay, so yeah, so here the problem is his manufacturer is selling this good for 80,000 to distributor. Okay, and government is taking 8,000 tax in this sale. Okay, so now the distributor's cost should be 88,000, not 80,000. Okay, it has to be 88,000, but here distributor is taking only 80,000. Why is this? Why isn't he adding the tax of 8,000 in his cost, in distributor's cost? Why isn't he adding tax of 8,000? Why? Because the government has said that whatever the tax you have paid, distributor, listen, whatever the tax you have paid on your purchases, I'll give them as he paid 8,000. Okay, that 8,000 I'll give you as input tax credit, ITC, tax on purchase. Whatever the tax you have paid on your purchases, I'll give that amount as input tax credit. Okay, so when you try to sell that good to some other person in future, if you are trying to make some sale to some other person, at that time whatever the tax you have to pay to me, in that you can reduce this 8,000. Okay, that's what government told. And now distributor is happy and he is not adding that 8,000 to his cost. He has just took 80,000 as his cost, and after that he has added his profit element, that is 10,000, and it has become 90,000. The price has become 90,000. Now for, okay, 1 second, before that we have to discuss what is the tax amount and all between manufacturer and distributor. When manufacturer sold to distributor has paid 80,000, and apart from that he has also paid 8,000, both 80,000 and 8,000. Okay, so whatever the tax he has paid, whatever the tax he has given to manufacturer, that tax manufacturer would have paid to the government, that is 8,000 manufacturer paid to the government. Government has took that amount. Okay, government is happy, paid to government 8,000. Here we took ITC nil because we are assuming that manufacturer hasn't made any purchases. So ITC is nothing but tax on purchases. So we have, for simplicity's sake, we have assumed that manufacturer is not buying anything. Okay, he has not paid tax on anything. So yeah, so we are clear with this column. Okay, yeah, let's move. So in case of distributor, for distributor the cost has become 80,000. To that he has added his profit of 10,000, and after that for 90,000 he tried to sell it to retailer. For 90,000 he has tried to sell it to retailer. So now government will tax him again. Government has taxed 9,000 rupees. Okay, now the retailer has to pay this 90,000 plus 9,000 too. Okay, so retailer will pay that amount, 90,000 plus 9,000. He'll pay it to distributor. He'll pay this amount to distributor. Now what this distributor will do? Distributor will take 90,000 and also this 9,000. Okay, now whatever the tax he has paid earlier, that is in earlier case he has paid 8,000, right? So that has come as input tax credit to him, that is his tax on purchase. Okay, this GST is nothing but tax on sale, that is nothing but output tax. Okay, now he has received output tax of 9,000. When distributor is selling to retailer, he has received 9,000. From that he'll deduct whatever the tax he has paid earlier. That means that 8,000 has come as credit to him. Okay, he'll deduct whatever the tax he has paid earlier and only balance amount, that is 9,000 minus 8,000, that is 1,000. So he'll only pay 1,000 to the government. This is paid to government column. So he'll only pay 1,000 to the government. So that is how GST works. Okay, this is one of the major aspects of input tax credit. Okay, so yeah, the retailer pays 90,000 plus 9,000. Now retailer will take only 90,000 as his cost and he'll add his profit element of 10,000. That will come to 1 lakh rupees. Now on this 1 lakh government, so for this 1 lakh he'll try to sell it to the customer, final customer, ultimate customer, who is going to bear all the tax burden. Now he is going to bear all the tax burden. But how? Let's see. On this 1 lakh, the 10,000 will be the tax. Now this customer will pay 1 lakh plus 10,000. So what this retailer will do? He'll take 1 lakh. He'll keep this 1 lakh. Obviously, this is his amount, and he'll take the 10,000. From that 10,000, so he has received 10,000. No, he has received 10,000. That is the tax on sale. He has made some sale. That is output tax. He has received output tax of 10,000. Okay, he has to pay that 10,000 to the government. But will he pay entire 10,000 to the government? No. What he'll do is he'll deduct his tax, the tax which he has paid on his purchase. When he is purchasing goods from distributor, he has paid this tax. No, now he'll deduct this tax from whatever the tax he has received on the sale, and only the balance tax, balance amount is nothing but 1,000. Only balance 1,000 he'll pay to government. This is government payment column. He'll pay only 1,000 to the government. So yeah, this is how this whole input tax credit system works, and that is how everyone passes their burden to the ultimate customer or consumer. He is the one who is going to bear the tax amount, tax burden. So government has collected its 10,000. So government has no problem now. And GST is a value added tax. Why? Because at every stage, manufacturer is adding some value. He is adding 20,000, 60,000. So his tax amount is on this 80,000. On this 80,000, government is getting 8,000. So here in case of distributor, he is adding profit value of 10,000. So it has become 90,000. So his value addition is only 10,000. So on 10,000, 10% is nothing but 1,000 GST. That is what government is getting. This is the same in case of retailer. Retailer is adding 10,000. On this, government is getting 1,000. That is 10%. So this is how GST is nothing but a value added tax. Okay. Yeah. Apart from this, there may be some doubt to the students that so why to keep all this input tax credit, why to take output tax, input tax and minus them, and balance government should be taken under output tax minus input tax and all. Why to do all this? Why can't we directly tax the value addition? So that may be one of the doubt people may be getting, but that won't be possible because of two reasons. Okay, I think you have got my doubt, right? So why can't we just tax the value addition? So let's take another ink. Okay, blue ink. Yeah. So in this case, value addition is 80,000. In case of manufacturer, value addition is 80,000. That is 20,000, 60,000. And in case of distributor, value addition is 10,000. And in case of retailer, value addition is 10,000 again. So why can't we directly put 10% tax on this and just pay 8,000? put 10% tax on this and just pay 8,000. Put 10% tax on this and just pay 1,000 at that stage. Why are we doing all this output tax and input tax thing and making it complicated and all? So yeah, that may be a doubt many people may be getting, but here is the answer for that. So here the problem is, if we do like that, credit won't be passed. Like here, what this manufacturer and the distributor and retailer are doing, they're passing the burden to the next person. In this, that's how customer will get ultimate burden, and he won't pass to anyone. He'll keep the good with himself. So yeah, he'll be one who will be bearing all that burden. Yeah. So the problem one is, if we tax just value addition, if we tax that way, credit won't be passed. Credit can't be passed. And we can say there is no free flow of credit. Okay, no free flow of credit. If we just tax value addition, free flow of credit won't happen. So let's say free flow of credit won't happen. So one is free flow of credit, that we know, but the second point is tax rates. Tax rates are not same. Tax rates are not same on every stage. At every stage, let's take example. Let me take example. Let's say an example. First, there is a cotton manufacturer, that is cotton producer, agriculture. Okay, this is a person A, and there is a person B. This B is buying this cotton and making cloth out of it. Okay, and there is a person C. He is also a manufacturer. He is making shirts out of it. The shirts which we wear. Okay, so now on cotton, when this A is selling to B, on that the tax rate will be, on cotton the tax rate is 10%. Tax matlab GST rate. GST tax. GST rate is 10%. GST is 10%. And when B is selling to C, here it is 10%. When B is selling to C, it is 15%. On cloth, the tax rate is 15%. Let's assume this. On cloth, the tax rate is 15%. And when this C is selling to customer, let's assume there is some customer and he is selling to customer. C is selling shirts to customer. On this, the tax rate is 20%. So here what happens is, whatever the cotton A has manufactured, let's say A has manufactured 10,000 rupees worth cloth. Like let's take 1 lakh rupees worth cloth. On that tax will be 10,000. That is what A will charge from B, and B will pay to A, and A will in turn pay to government. Government will get 10,000 as tax at this stage. And when B is selling to C, B is selling to C, let's say B has took that this 1 lakh as his cost. He has took this 1 lakh as his cost, and he has made some processing, and for all that processing and adding his profit, it has become 50,000. Let's say it has become 50,000. So his total price is 1,50,000. Let's say. So 1,50,000 he is selling it to C. Oh, let's take it 1 lakh. So he also paid extra cost of 1 lakh, and he also added his profit in that 1 lakh. So total his cost is, his price has come to 2 lakhs now. For 2 lakhs he is now selling it to C. So on this again there will be tax. Right? So what is the tax percentage now? It is 15%. 15% is nothing but 30,000 now. So he's been levied a tax of 30,000 now. So now this 30,000, how did we get this 30,000? On this 2 lakhs, on this amount of 2 lakhs, we have made 15% GST tax. That has come to 30,000 now. 10% is 20,000 and another 5% is 10,000. So it has come to 30,000. So in these 2 lakhs, there are 2 components actually. Okay, see, just focus this now, you will understand it clearly. In these 2 lakhs, there are 2 components. One thing is the cotton value, I mean the 1 lakh rupees worth of cotton. 1 lakh rupees worth of cotton, whatever the cotton manufacturer has send it to B, A send it to B, and after that 1 lakh is of value added by B, value added by B. Now what is happening is, when we apply 15% here, that 15% we are applying both on this 1 lakh, that is on cotton. Earlier cotton value also, again we are adding extra. Actually we should, on this cotton 10% is 10% tax already charged, so basically on cotton 10% to be charged. Now here we are taking 15% GST on this also and 15% GST on this also, so total it will come to 30,000. okay, from this 30,000 this person B will get a input tax credit of 10,000. So from 30,000 is what are the tax he has paid on like tax on sale. When this B is selling to C, 15% comes to 30,000. okay, that is output tax. Output tax to whom? 30,000 output tax to whom? Output tax to B. For B it is output tax. Matlab, when B is sending the goods out of his business, he is paying this tax, so we call it as output tax. okay, so his output tax is 30,000. Tax on sale or output tax, we can call it as output tax. This is 30,000. So earlier to this, B has bought the goods from A. At that time he would have paid some tax, that is 10,000. So input tax, when B in the beginning B bought goods from A, no, at that time B has paid some tax, that is nothing but input tax. Input tax or tax on purchase, that is nothing but 10,000. So from this output tax he'll deduct whatever the tax he has paid on purchases, that is input tax. Only the balance amount he'll pay to government, that is nothing but payable to government or paid to government. He should pay to government. So 20,000 he has to pay to government. So here the logic is nothing but, so on cotton, which is the value added earlier, on that value, on the same value, now 15% is charged. Again 15% is charged. Actually this system works, the earlier system actually this works when tax rate is same on anything. Like if we tax only value addition, so let's take here value addition. So at the stage of A's value addition is 10,000. okay, let's say A's value addition is 10,000. Now on this 10,000, 10% means government will get 10,000. okay, government will get 10,000. And B's value addition, how much is B's value addition? B's value addition is 1 lakh. On this also let's assume government will get 15%. Tax rate is 15%, right? So government will get 15,000. So government will get 15,000. okay, in this way how much is government getting? Here government is getting 10,000. Here at the second stage, when B is selling to C, government is getting 15,000. But if we won't like directly won't tax value addition, if we tax through this way, our way, input tax, output minus input and all, if we tax like this, government is getting 20,000 here, and earlier government got 10,000 anyway here. So government is getting total of 30,000 here, 30,000. So government is taxing extra this way, and this won't be there in your syllabus and books, but yeah, this is the logic. So government will not tax value addition because the tax rate are different on every item. So on purchases the tax rates will be different. So let's assume for cloth there may be different inputs, like they have to purchase some cotton, they have to purchase some buttons, they have to purchase some thread. So on thread there may be 20% tax, on buttons there may be 15% tax, on cloth may be 10% tax, so cotton there may be 10% tax. So there may be different taxes on different things, so it won't be possible to directly tax value addition. If they do like this, government will get less tax, and it won't be easy for, actually it won't be viable to opt for that for the government. So yeah, that's the reason why government is choosing to this. They say it is value addition, but it's not actual value addition, I think so, but yeah, that's how it works. And I'm sorry by this, already we have completed 25 minutes, that's our class time, 25 minutes. So let's wrap it up till now, and I'll upload the next video again. I'll upload on the same day, don't worry. So yeah, this is how I think we'll end input tax credit here itself. Thank you. And if you have any queries, please do subscribe to our Telegram channel, and please don't hesitate to ask over there. Any doubts are welcome. Okay, thank you.